CPI numbers came out today and they were honestly phenomenal. The market ran much, much crazier than I thought it was going to be. I ended up closing out Tesla calls for 52% return, $14,000 profit. We're going to talk about why I closed them out because I do still think we're going to probably move to 240 or 250. I just didn't want to continue to hold on to the trade, and I'll explain in a little bit more detail as we go on what that means. We're going to talk about CPI numbers that came through. We're going to go over the massive phantom prints that came through too on the S&P 500. It seems like SPY, just looking at the money coming through, is really going to continue to run over the next couple of weeks and probably the next month or so. But let's start first with Tesla. Like I said, I closed out my calls that I entered yesterday. I went with March because I was planning on holding these for the next couple of weeks, but we ran about 12% since I ended up getting in. Now, if I would have got December calls, I would have made much more, but a 52% return in just a couple of days, I'm extremely happy. You can see we had this inverted head and shoulders pattern that we've been talking about for a while now. The level that we were looking to potentially break over was 225, up to about $227. After CPI, we had a massive gap up. I made a couple of dollars too on futures, and then we opened, held around this level, and continued to push up into the rest of the day. You can see that we still have this gap to fill from 237 up to $242, and the volume on the volume profile is very thin from 245 to where we are right now. These horizontal volume bars that you see on the right here, a lot of people ask me about these, and this is going to be called a volume profile. The volume that you see on the bottom of your screen here, this vertical volume, this is going to show you the amount of shares that were traded within a specific day. It is important because we want to see volume either coming in or getting drained from a stock, depending upon which way we're trying to play it. But what we don't know is at what levels big money is actually buying and selling. When we have these thinner areas of volume, basically from 220 all the way up to 244, the stock tends to move very quickly and in a very volatile manner within these levels. And you can see here that as we will be moving up to 245 and into 250, this big block of volume is going to act as a strong resistance point. And the reason that I closed out today was that I was up 52%, and I felt to myself that, Tesla from down here where I had puts all the way up to right now is up 15% in just 5 days, and that the chances of us potentially pulling back down to fill the gap at 224, I would rather sit here, watch Tesla run and be like, oh, I could have made, more money than give up all of the gains that I had initially put into the trade. And now I'm not saying that that's the best thing to do. Most people will say, dude, you should just let it ride. But at the end of the day, trading is, yes, technical, but it's also very important psychological that it's different for all of us. We all have different risk tolerances. We all sleep better at night with specific things. I'm somebody who wants to make money in the least stressful manner as possible. And I know that I'm going to sleep really well tonight, knowing that I made 14 grand and knowing that I'm just not going to have to hold the position into the rest of the week. Now, as I said, if Tesla pulls back down to 225, I would love to re-enter. And then if that happens, we would watch for the continued move back up to 245. However, I don't think that's going to happen. More realistically, I think the Tesla and the market is just going to continue to run up to 245, and I'll probably miss out on some more profits, but it's fine. Now, I have had a lot of people asking me if I'm still going to go short on Tesla at 250. And the answer is yeah, I still am. I mean, looking at the weekly chart, it looks like Tesla is probably going to continue to push up. And if we break through this resistance level in the next 6 months, we could run to $375. But the reason that I will go short, and we'll talk about this position setup, is simply just because the risk versus reward and the sheer amount of selling pressure. Now that we've zoomed out to a daily chart, this is going to be double the time frame of a 4-hour, which we were just on. You're going to be able to see that we're trying to hold under this 50 SMA. We're still in this uptrend now that we're holding over the 200. Really, I'd like to see us back up over 260. But this 50 SMA short term at 240 is going to act as a small resistance. Once that resistance is taken out, which I think will happen, our next move will be back up into this $260 range, which we have one massive bearish order block and another massive bearish order block from $257 up to $268. these levels will be very, very hard for Tesla to get through. But the one thing to understand is that if we look at our volume profile on the right, we notice that all of our volume is sitting here, and then all of our volume is sitting here. So these moves, these are the easy moves that we tend to see. If you guys remember, we traded this a long time ago. Last time we broke through, we played puts here on the breakthrough and then calls on the push back up. And so I can easily see a potential continued run and a rejection at 260. The other thing is if we do a fib pull, so we'll take our Fibonacci retracement, we'll go from this swing high right before earnings down to most recent swing low. And if we pull this out, you're going to see our 0.768 Fibonacci, or the golden zone, is sitting at 250. So in my opinion, I hope that we pull back and I can go long, close out again at 240, 250, short, which we talked about earlier. But really what I'm looking for at this point is a continued run up to about 250. But really, I want to see 257. 257 is where I'd be looking to go short, setting a stop loss at 270 and a take profit down at 220 and potentially $200. But I'm not really looking that far ahead just yet. If we look at unusual flow that came through today, as well as some phantom prints, it seems that big money is still very, very, very bullish. We're going to take a look at a phantom print that came through on the S&P 500 today at 2:25 p.m. On the right side of your screen, you're going to see S&P 500, 225, phantom print volume is 46,000. Now, if you don't know how to read phantom prints, or if you don't know how to read flow, you can go into our Discord community, which is free. It's going to be the first link in the description. You can go to our courses and seminar section and watch our video on how to read these and how to use these in your trading. And we post all of these in our Discord as well. So today we have 46,000 that come through. A phantom print is basically a magnet level. The way that I like to do this is I will look for a big print such as this, 46,000 on the S&P 500. It came through when SPY was trading at 448 and the price is 458.66. So we'll come over here, take our horizontal line, 458.56 is basically right about here. So I'm going to go through and we're going to make this purple. It's just easier for me to see. Actually, we'll make it a little lighter. There we go. So normally what will happen here is this is going to run all the way up to this level, probably within the next week. So it seems that looking at this phantom print, it's looking like the S&P 500 is probably going to run another 1.7% in the next couple of days. Once this print is taken out, we'll probably reject. If you notice where this print is as well, look, it's pushed right up at this block, but it's also at this resistance level at all-time highs. So it's pretty crazy to look at, but it seems, I'm sorry, not at all-time highs, at recent highs for the S&P 500. All-time, I was like, I thought that we were up at like nearly 500, but still, all the way up into this level, that's recent highs as of July. And if we look at the weekly chart here, that would push us up into the top of this block as well. So over the next couple of days, I think we're to continue to run this rally. We had inflation numbers that came through at 3.2%, which is down massive from COVID time. So honestly, like we've been saying for the past couple of days, we're through earnings. We're through, most of the things that would really mess things up right now. There's no Fed decision seems like for December, we're not going to get a rate hike. We have CPI that comes out. It's phenomenal. The yields are starting to drop on the short-term bonds. So it seems like we want to continue to run for the next couple of months. And, for me, it's not something that I think should be happening. If I were to look at I said this yesterday too, if you were to look at the market and look at the economy from a fundamental standpoint, I don't think we should be running like this, but we are. So why go against it, right? Why be shorting the market at this moment? Now, the last thing that we're going to cover is going to be Nvidia, because a lot of people have been looking to go short. Today, up another 2.5%. We're sitting up at this resistance level on the final bearish order block that we have in play. I posted on Twitter back on, I think it was Sunday night, where I said I was initially looking to go short on Nvidia. And then I was like, dude, what are you doing? Like, there's nothing showing a rejection here. You're just shorting because it's overvalued in your opinion, which is absolutely stupid. You guys should not be doing that. I shouldn't be doing it. And I'll be the first one to admit my mistakes, like I said, and say that it was a dumb move, which is why I didn't end up holding that put. I know a lot of people are going to really be enticed to go short here on the 21st as we move into earnings. But something to note is that, yes, while we are up here on this resistance level, there's a chance that we can run all the way up into 550. So at this moment, I really wouldn't be shorting. Like I said in yesterday's video, I'd be looking for a potential rejection as we saw here and I'd be looking for the break under the 11 SMA. You can't go around just shorting shit because you think it's overvalued. Like that is a recipe to get absolutely murdered. A lot of people ask me like, dude, how are you so profitable? And it's just because I trade with the trend. Like I don't do anything crazy. I'm just gonna not go shorting something that's been skyrocketing for a couple of weeks that, in my opinion, shouldn't be this high right now, but it doesn't mean that it can't. The market can remain ridiculous longer than I can remain in business and the longer I can remain solvent. So be careful about shorting this market right now. In the meantime, I'm going to continue to trade the upside. If you guys want to trade alongside me every single day, go use the second link in the description. Guys will get access to all my trades. If you want to take your trading serious or to the next level, or just learn how to make as much as you possibly can in the least stressful manner, go check it out. Today we killed it, made 700 on SQ, another 700 on Meta, closed out $13,000 on Tesla today, opened up a couple of swings. So if you want to come hang out, trade with us every day, it's the second link in the description. Thank you for all support. I'll see you guys next time. Peace.